Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this Monday afternoon. Well, it's turning out to be a very good session for our markets. It's a strong start to the week. It is a strong start to the week where we have a lot of cues, in fact, lined up. We have the interim budget on Thursday and globally we have the FOMC meeting, which is starting tomorrow. So that would be important in terms of a cue for the markets. Besides that, we have a lot of frontline stocks which are gaining. So there's a lot of strength coming into the likes of ONGC, which is at the high point of the day, up 8.5%. Reliance Industries at a record high. That stock has surged 7% Adani Enterprises, Adani Ports, Coal India. All of these stocks within the frontline space have surged anywhere between 4.5% to over 8%, giving you an indication in terms of the kind of interest that we're seeing, the buying that we're seeing. It will be interesting to see what the FIIs do in today's trading session, considering that FIIs have net sold over 35,000 odd crores in the month of January itself. So whether or not there is a turn in terms of sentiment when it comes to the FIIs, that would be interesting to see, considering the kind of buying that we're seeing coming in terms of specific frontline stocks. Well, joining us this afternoon, we have Vaishali Parekh, who's the head of tech research at Prabhudas, Lilladher, and Shahina Mukadam, independent market expert, to answer all of your stock queries. Vaishali as well as Shahina, welcome to the show. Before we get to the queries, Vaishali, well, we started the week on an extremely handsome note. What would you recommend?
Well, good afternoon all. And yes, we have got a good start. And I think the way Nifty has given us the lead, I think we are gradually progressing towards 21,900 because we were very skeptical. Last week was a week with full of profit booking and whipsaws. But today with the start and Nifty crossing the near-term resistance of 21,720, I think we are now in a very comfortable situation. Now we would have an elevated support, targets of 21,900 to 22,000 for days to come.
Okay, all right. Let's get in a couple of queries now. We have our first question coming in from Venkateshwarulu, who writes to us from Chennai. He holds 20 shares of Tata Technologies, which he's bought at 1250 odd rupees. So his buy price is higher than what the current market price is. He's asking if he can purchase another 30 shares of that stock. Well, Tata Technologies, it's away from its 52-week high, which stood at around 1400 odd rupees. So maybe there could be some upside if in case there is an up move which comes through. Shahina, let's start with you on this one. Good amount of profit growth that they've indicated or shown this quarter. But what would you recommend on the fundamentals? Would it be a buy at these levels?
I would recommend that the investor waits and picks it up on declines. Of course, there's nothing wrong with the stock, even at current levels, in terms of the management quality, the business. You know, it's a good leading player in engineering R&D for auto. At the same time, I think valuations are far ahead of what the peer group also, if you compare it within that group as well as by itself. I think it is better to wait and add at little lower levels. All good stocks, at some point in time have certain dips. I think it will be better to buy it at that level because as of now it's 55 times 1 year forward, which I think is pretty expensive. So one can just wait and buy it at dips.
Okay, all right. Well, what would you recommend, Vaishali, on this one?
So, well, actually, I have a limited data, but I would say from what I have is that, yes, the indicators are pretty much in the oversold zone and its stock is making an attempt to bounce back from its oversold zone. So I would say it would be, I don't see much of a downside keeping the fundamentals intact. I think one should start accumulating because, as per the disciplined trading, I would say keep a stop loss of 1125 and start buying this because once we see the stock moving above 1160, 1200 levels, I think it will be out of the woods and we'll be seeing higher targets. So that's how I would look at this stock.
Okay, all right, fair enough. That's on Tata Technologies. That's Nitin Spinner's numbers for you on your screen. Strong margin expansion of around 71% to over 100 odd crores, and the margins have also expanded over 200 basis points to 13.7 versus 11.2%. So good going in terms of what they have reported, both on the operational front, especially in terms of the EBITDA as well as the margins. As you can see, the revenue has surged 40 odd %. It's not really necessarily seeped into the profit. Maybe the profit there is an exceptional which we need to account for. But nonetheless, we do have Karthik Joshi, who writes to us from Gujarat. He holds 500 shares of Easytrip Planners, which he's bought at around 42 odd rupees. So he's sitting on a profit. He wants to know what to do, whether he should hold or sell and invest in another stock and, take his profits from this one. Well, what would you recommend, Vaishali, to Karthik on Easytrip Planners? It's a little away from its 52-week high. And 52-week low also stands at around 37 odd rupees. So what would you recommend on this one?
Well, I would say actually the stock technically is on a trending, and we have just seen this retracement. So as long as the near-term support of 44 level is held on, I think this stock is ready for a new round of momentum. Even seeing the weekly chart and all, I think it is going to get better. But well, for this stop loss is a must. So below 44, it negates my view, and I would keep a range of 44 to 52 for now. And once we see the stock moving past 52, 53 levels decisively, it has a scope of going towards 60, 63. So for now, it's a hold with 43 as stop loss.
Okay, hold with 43 as a stop loss. What would you recommend on this one, Shahina, on Easytrip Planners?
Yeah, I would agree with this. Hold with a stop loss. They have plans to raise 1,000 crores by preferential issue, and this is largely towards acquisitions in the non-air segment. They're pretty strong in the air ticketing business and segment. So I think to that extent, they are doing pretty well. Financials are improving. Valuations are a bit stretched. That is why I agree that one needs to keep a stop loss, but it looks pretty good to hold from here.
Okay, well, let's get in another query now. We have Mahinder Vadva, who writes to us from Mumbai. He holds 6,000 shares of REC, which he's bought at an average cost of around 130 odd rupees. So he's sitting on a very good profit there. He wants to know what to do, whether he can hold this stock for a year or two, or should he book his profits and re-enter at lower levels? Well, interesting question on this one. Vaishali, I'll toss it over to you, considering that, technically the stock has done very well. So what would you recommend?
Well, I would say, of course, the stock has got, even on a monthly chart, if you were to see, right from 80 levels, there has been no disturbance in its trend and it has gone one way. So I would definitely suggest to book partial profit or keep a trailing stop loss, because I think he is gaining handsome gains and should safeguard his profit. So either keep a trailing stop loss or book partial profit.
Okay, all right. Any view on this, Shahina, on REC?
See, valuations now at about 2 times book have started becoming slightly, fully valued. So I would agree that, you can hold with a strict stop loss or book partial profits and hold for the longer term, because business prospects remain strong. The government have recently announced the large scheme for solar panels, which I think RAC is going to try to gain some market share in that. So business looks good.
Okay, all right. Business looks good. Well, we have Deepa, who writes to us from Chennai now. She holds 500 shares of City Union Bank, which she's bought at 140 fund, and she's holding it since more than a year. She's sitting on a bit of a profit there, almost flat. She wants to know what to do, whether she should hold or sell at these current levels. Well, what would you recommend on City Union Bank? Fundamentally, Shahina, what would your recommendation be? It's still to release its numbers. But, the company has many times over reiterated that they're looking at around profits of 1,000 odd crores in FY24. What is your sense on the fundamentals? Do you think that there could be an up move there?
Yeah, I do think so. I think the numbers will be pretty good. They're coming in the next couple of days. And I think, they are managing to pull through some growth. Well, overall banking growth has been low, but I think they are going to come out with decent stable NIMs, and price to book about 1.2, just around those 1.2, 1.3 times. I think going forward for this year should be decent in terms of valuation. So one can continue to hold.
Okay, all right. And what would you recommend, Vaishali, on City Union Bank?
So I would say, well, there is not so much of a strength that we see currently. In the recent past, we have seen the stock making a high of 167, and from there on, we have seen a retracement occurring. So it's pretty much close to its support level of a 200-day moving average. So I would say keep a range of 138 to 155. So that would be the range. So if he's in a hurry to exit, should exit at 155, but else keep a stop loss of 133, because below that it would negate my view and get weakened. So I think 130.33 acts as a crucial support, and wait for a bounce at 150, 155. From there on, we can have a relook as to where the stock is going.
Okay, all right. Well, we need to take a break on that note. But as we do that, this is a quick update. The union budget is just 3 days away. What is your wish list for the finance minister presenting the CNBC TV18 budget ballot? You can now share your budget expectations with us on our website by scanning the QR code on your screen or by logging in to cnbc-tv18.com/budget. Welcome back. You're still tuned into Your Stocks. We still have with us Vaishali Parekh of Prabhudas, Lilladher and Shahina Mukadam to answer all of your stock queries this afternoon. Well, before we get to that, just want to point out that the surge in the market is continuing. So we have the sensex, which is up a cool 1,162 odd points as we speak. We have the nifty, which is up over around 360 odd points. So going into the week, which is filled with cues on a very strong footing. We do have some important numbers to take note of today also. So, for example, we have Bajaj Finance, which will be reporting its numbers. It'll be important to watch out for. Frontline stocks surging away: Reliance Industries, ONGC, Adani Enterprises, BPCL. Just a couple of losers on the Nifty, such as Cipla, LTI, Mindtree, as well as Dr. Reddy's. Even Infosys, in fact, showing some amount of profit booking. So that stock is down around 0.8% along with TCS. But let's get in some other queries now. We have Tony Lobo, who writes to us from Mumbai. He holds 25 shares of SKF, which he's bought at around 5,267. So he's bought much higher than where it is today. He wants to know what to do, whether he can hold the stock for a couple of years or exit at these current levels. Well, what would you recommend, Vaishali? Do you think that the technicals are set up for an up move on this one?
I would say so, because actually when I'm seeing the weekly chart and all, I think the trend is quite intact. Only if 4,300 levels, or let's be a bit liberal, 4,000 levels break, then I think that would be bringing a negative view to the stock. But on a near-term basis, I think the stock has really been consolidating at these levels. So I think it's worth holding, because the confirmation of the strength comes only above 4,800. So once we see the stock moving above 48, 4,900, I think we can be hopeful for the stock again going towards 5,300 and so. So I would say that yes, worth keeping the stock for a longer period.
Okay, all right. Worth keeping the stock for a longer period of time. That's on SKF. On the technicals, Shahina, on the fundamentals, what would you recommend?
Continue to hold. It's one of the leading players in bearings, both in auto as well as industrial. Both contribute about 50% each segments, to its overall revenues. Very strong balance sheet, and it's a steady performer. So, one should continue holding it in your portfolio. Add it, at every dip, and build it up over a long term.
Okay, all right. Well, we have one more from the broader markets in terms of a query. Kalpesh Thakur writes to us from New Delhi, holds 600 shares of Heikel, which he's bought at 538. So he wants to know what to do, whether he can stay invested for the next 1 year. He's sitting on a big loss there. What would you recommend, Shahina, on this one? Do you think that there could be maybe some amount of upside fundamentally on that one?
I would exit, because while valuations are not expensive, the numbers that are not expected to be pretty strong that will come out in the next couple of days. Not only that, the company continues to face pollution issues, both its plants, Maharashtra, Gujarat. It will not attract large investors because of ESG concerns. So I would stay away from Heikel, exit, and book the loss.
Okay, all right. And technically, Vaishali, what would you recommend on it?
Well, I would say, of course, the trend is down, but now that if he's held on for so long, keep a stop loss of 275, which is very close to his price right now. Because if there is something favorable happening, the stock can bounce up to 300, 320, and well, maybe even up to 335 to 340. So that would be a better price to exit the stock.
Okay, all right. Well, let's get in another query now. We have Rohit Kapoor who writes to us from Chennai. He holds 20 shares of SpiceJet, which he's bought at around 30 odd rupees. So he's doubled in terms of what he's at least bought. And he's asking what to do. He's asking whether to stay invested or to exit at current levels. He has a quantity of around 20 odd shares. So what would you recommend on this one? Do you think it's set to fly or soar even more? No pun intended there, Vaishali.
So right now, well, this stock too has seen a one-way rally, right, from 20 odd levels to now 62. So technically, there is a tough resistance at these 63, 65 levels. So I would say keep a trailing stop loss because this can correct to 55, and that would be a level to again re-enter and look for a target of 70 to 80 from here on. So that is how he can play the stock.
Okay, well, there's definitely some amount of news being factored in on this one. Fundamentally, Shahina, what would you recommend? Because there's so much news circling around on it.
Yeah, the news one, of course, is that the preference issue is done at about 50 rupees. They're raising 2,200 crores. So to some extent, yes, the balance sheet will look slightly better, but still the net worth is negative. So I don't really think airline stocks, barring, one has really made you money. Now the investor has made good money on SpiceJet. I think he should take his money home, sell, exit.
Okay, all right. Probably take his money home. That's a recommendation on the fundamentals. Rakesh Gupta writes to us from Kerala with an investment question. He wants to invest in banking stocks and asks out of which private or state-run banks will be best suitable for him. Well, there's so much news during earnings season which comes up with regards to private banks as well as public sector banks. In this slew of news and earnings, what would you recommend, Shaina, in terms of this investment query?
Well, let's take the two banks that were in the news today, HDFC Bank and PNB. Now, HDFC Bank, the consensus is that over the next couple of quarters, numbers are going to be weak. Deposits, the deposit growth is actually going to be sluggish, and there's going to be a rise in cost of funds. So to that extent, I think HDFC Bank is likely to see some consolidation in stock price over the next couple of quarters. At the same time, I believe that valuations have come to such levels that if you're a long-term investor, one needs to be in private sector banks because they are gaining market share. And HDFC Bank, ICICI Bank are one of, some of the banks one needs to be in for the longer term. So one can start buying in tranches, because there's no rush, no hurry. The other, like a PSU bank, if you want to get into, today PNB came out with very strong numbers. And I think the outlook is also good. And even if you look at, though the price has moved up, but even if you look at the price to book, it is still not very expensive. So I think if you're looking at the shorter term, want to make some trading bet, take a trading bet for the next 2 to 3 years, one can look at the PNB also. And of course, in public sector, SBI does look good. So these you can sort of build a portfolio in banking for the medium to longer term, with some of these stocks.
Okay, all right, Shaina as well as Vaishali, we're going to leave it on that note. Thanks very much for joining in and taking us through all of the queries that we have had this afternoon. Just want to leave you on the show with the idea that the markets are in extremely strong territory today. We have the Reliance stock, for example, which has surged 7%. So it's not only at a record high, it is the biggest one-day surge I think we've seen in a one-day gain that we've seen in more than 3 years. This is the data that Sudarshan has given us, and it's added a market cap of more than 1 lakh crores. So that's the kind of gain that we're seeing only on one specific stock, and that's lifting the entire market as well. Standard disclosure, it is the owner of the channel that you're watching. That's all the time that we have on the show. Do remember to email us your questions and we'll address them with our experts. Stay tuned. Closing bell up next.
so many conflicts